once again on a Friday morning, but this time we're not talking about a payrolls report, Mohamed. We're talking about this election race. Your early reaction to the news from 10 minutes ago?
So I think the election race is clear, that Vice President Biden will win this election, and then we're going to have a whole series of legal challenges. I don't think, John, and I'm here out on a limb, but I don't think the market actually has paid much attention to the elections in terms of its pricing, other than to see it as guaranteeing that central banks will do more. And that got reinforced in that notion by what the ECB and the Bank of England did and by what Chair Powell said yesterday. So I think that's what's driving a market that, to use the phrase of one of the earlier guests, just wants to go higher.
Mohamed, it was a phrase that you used with me several weeks ago, a market that just wants to go higher. We take the price action, we build a nice, pretty story off the back of it and explain what's happened. Mohamed, the danger of doing that is you become attached to that story. You extrapolate out what's happening a week, a month, 3 months, a quarter, a year, and then you find out things change again. I wonder, Mohamed, for you, what you see right now, what's a position squeeze and what do you think is sustainable?
So I don't see anybody wanting to question this market, because they feel it's a steamroller and you will be completely flattened. So either you stay on the sideline or you participate on a tactical basis. And the more people participate on a tactical basis, the more you develop the whole narrative that reinforces it. And it keeps on going up for a while. I think the fact that we haven't talked about the jobs report is quite interesting, John. It is 10 minutes into the hour. We haven't yet talked about it, and I think that that just reflects that this market is starting to live on its own. And these other things are interesting, but ultimately they play out in the bond market much more than they play out in the equity market.